both questions: how low can it go? While nobody can confidently answer this, the first question, I will try in a moment. The second is pretty easy. Low oil prices will last long enough for one or two events to happen. The first possibility, one most traders and analysts seems to expect, is that Saudi Arabia will reestablish OPEC's monopoly pricing once it achieves the true geopolitical or economic objectives that spurred it to trigger the oil slump. Secondly, the possibility, one I wrote about 2 weeks ago, is that the global oil market will move towards a more competitive conditions in which prices are set by marginal production costs rather than Saudi OPEC monopoly power. This seems like a far-fetched scenario, but it is more or less how the oil markets have worked for the last 20 years or 2 decades. Whichever the outcome finally puts a floor price. We talked last week here about a floor price. We can be confident that the process will take a long time to unfold. That's one thing that most analysts agree upon. It is inconceivable that just a few months of falling prices will be enough time for the Saudis to either break the Iranian-Russian axis or reverse the growth of shale oil, production in the U.S. It's equally inconceivable that the oil market could quickly transition from OPEC dominance to normal competition. The many bullish oil investors who still expect prices to rebound quickly to their pre-slump trading ranges are likely to be disappointed. The best the oil bulls could hope for is a new and substantially lower trading range may be established in multi-year battles over Mideast and oil share playout. The key is whether the present price, around $55 a barrel, which is too high, will prove to be the floor of the new ceiling range. The history of inflation-adjusted oil prices, deflated by the U.S. Consumer Price Index, offers some intriguing hints. 40 years since OPEC first flexed its muscle in 1974, Jimmy Carter was president. Can be divided into three, actually in 76 Jimmy Carter became president, in three distant periods from 74 to 85. West Texas Intermediate crude, we always talk about that, T. Boone Pickens and Company. The U.S. benchmark fluctuated between $48 and $120 in today's dollars a barrel. From 86 to 2004, the range of $21 to $48, apart from two brief periods during 1998, the Russian crisis, he calls it, and the 1991 war in Iraq. From 95 until this year, oil has again traded in the 74 to 85 range, roughly $50 to $120 a barrel. $120 being too high to sustain. What makes these periods significant is the trading range of the past 10 years, very similar to 74 and 85 there, but 19 years from the 1986 to 2004 represented a total different regime. It's still plausible that the difference between these two regimes could be explained by a breakdown of OPEC's power in 85 and a shift from a monopolistic to competitive pricing the next 20 years. OPEC took advantage of a surging Chinese demand. China actually had a lot of demand, and we'll digress a bit from Anatoli's article here. We perhaps call it a polemic, in that in this scenario China does play there, and with the ruble falling and a lot of long-term deals. We've talked about these long-term deals out there, And oil supplying nations, it obviously behooved them, as the Russian Federation, to sign long-term contracts with China and also with Japan. So Japan gets cheaper energy cost out of the deal, will help their economy, and at the same time, the Russian Federation has a continuing stream of capital flowing into it as they move more from Europe based situation there. Where does that leave the U.S.? Well, the U.S., as President Obama stated in his final news conference, has become the #1 oil supplier, but that is very tenuous description of where the U.S. Stands, because the shallow oil operation there is the U.S. And I'm back to his article, is perhaps the strongest argument for return to competitive prices. Would not happen there because the Saudis understand how to sell 2 for 1, thus they can push the price down. They can pump more oil out there and force the shale oil people to sell it below their magical $60 to $50 flowing, where they have to close their wells down. But as one article pointed out, they can quickly start these up again. But it is a very expensive process involved in the fracking, and that basically using water to push this out between the rocks. You used to have the old maximum, you can't get water out of a rock. Well, you can put water into a rock. So there's 40 to 50 there. If you get that to the ceiling, the shale slay, or what do you want to call it, oil, rock oil, in trouble. So which of these arguments will prevail? The bearish case for $20 to $50 trading range based upon competitive market pricing, or the bullish $50 to $120. Ask me again once the oil price falls to $50. That's what his take is on it. Let's now go to the BBC. Attempt to straighten up a little bit of the confusion there as to where things will go in that in itself. Headline of the BBC, companies face a bloodbath in Russian Federation. Chief executives of Renault, Nissan said the manufacturers in Russia are facing a bloodbath because of the plunging value of the ruble. As Carlos Gusant, but the currency has been dropping steadily for several months. Two firms have stopped taking orders for new models and raising prices of others. The French-Japanese Renault Nissan alliance is a major player in the Russian automobile industry. With manufacturers taking similar steps. That is Audi, Jaguar, Land Rover, and suspended deliveries to Russian dealers earlier this week, and General Motors. But General Motors' share in Russia is very low. Could also have an impact on the premium end. That's the Jaguar, Land Rover there. Some impact there. I'm not sure on Audi. Apple is deeply offended by a BBC story. Apple has said it was deeply offended by BBC investigation condition for workers involved in manufacturing its devices, rules on workers' hours, ID cards, dormitories, etc. Juvenile workers breaching the Panamanian program witness. Sorry state of affairs there. exhaustive workforce making products in China, as well as children in extremely dangerous mines in Indonesia. And Williams was published in the Telegraph. This is the Panorama. I misspoke. Panorama program on the BBC. That Apple is not working to improve conditions. Panorama film showed exhausted workers falling asleep on their 12-hour shifts on the outskirts of Shanghai. That has been a continuous problem. Literally, the poor workers have collapsed at the table. It used to happen with American workers. It's a senior vice president, Williams. Won't go too much into that. We'll save that for our political part of our programming. We already covered Nigeria there. Belarus moves to protect its currency. And parts of the volcker-rule delayed by the Fed until 2017. Federal Reserve is giving Wall Street bankers even more time to comply with parts of the volcker-rule. This is, I suppose, the new Republican Congress can undo it. Initially, the Fed said banks would have until July 2017 to stop trading in collateralized loans obligations, which essentially move risk of investments and loans off their balance sheet. The new extension applies to two other types of legacies covered funds, according to release by the Fed. The volcker-rule is named after, of course, Paul Volcker. And it limits the ownership of state banks have in risky funds to a maximum of 3%. Part of the rule, all which would ban proprietary trading, is scheduled to take effect July of 2015. The second big victory for banks, who have spent nearly 4 years arguing that the regulations stipulated in the Dodd-Frank bill are too onerous. They always say this, but the objective is to put the banks under some type of control and not have the risk as what they are having now. Let's go to the markets here. Sometimes in detailing these forecasts we go a little bit slowly with them, but I think we took care of some very important things. The FTSE, this is a Friday unless otherwise noted, and are in positive unless we say negative. 79.27. In Amsterdam, they were in the negative, in the positive 1.93. In Frankfurt, they were 24.10 in the negative there. That's the DAC. That's right. In Paris, they were also in negative at 7.84. In Brussels, 30.007. In Madrid, in the negative, also 27.70. Same thing for Zurich, 36.87 in the negative there. And in Moscow, you would expect this in the negative, also 28.14. In Johannesburg, negative 294.82. In Bombay, 245.27. In Karachi, 196.62. In Lahore, they were also in a negative 9.69. In Colombo, 22.08. In Tehran on Wednesday, in the negative, also 113.80. In Sydney, they were 123. The Nikkei was 411.35. The Hang Seng in Hong Kong was 285.42. In Shanghai, they were 51.